Hello everyone. Okay, let me get this live stream linked out on the medias and we'll get started. Just going to be a quick one. Hopefully, if price behaves. Put that here and here. Then let's go on to Discord and Twitter. I'll get started. I do have a small initial vet short already, and I may add on weakness, or if we push up to that channel. Where is the announcement channel? All right. Man, I have so many places to link all this stuff. All right, I think we're done. Okay, so the idea of this vet short was to push up into this ascending channel. The trend line derived from the lows, anchored to this high, gives you this nice level with the 786 from this high. And 786 is a really important retracement for altcoins. Always something to watch. Obviously, we've run through it a little bit, which I suspected we would, even when I tweeted about this, I think yesterday or the day before, just because for us to hit this channel, we needed to come through it. So we didn't quite hit the channel, and we didn't quite hit the 786 perfectly. So when I look at local price action, when I'm looking for weakness, even on the 5-minute chart here, so we do start to have some weakness in this local structure. So I took an initial short. My stop loss is actually a little higher. I didn't quite draw this perfectly. Just outside of the channel, and my idea is, ideally the strongest sign of weakness is to lose these highs and backtest them, which would probably be the most ideal entry. Stop outside of the channel. You know, if we bounce off these highs and hit this channel and then reject and swing failure of these, that'd be another sign of weakness and another place where I would enter. But I decided to enter locally here with a bit of a wire stop with a smaller position, knowing that I may have to add higher. So I don't want my full position. I did a today it's been a long day. I ended up doing a very long, probably, I mean, it ended up being 2 live streams, like 4 hours long. I stayed up all night last night to short BNB up here. That was a members live stream. Because I did a video, I got stopped out of a short down here, and then as I was doing that video, I wanted to trade this. I decided to go live. It's been an interesting last 12 hours, I guess. But you know, Bitcoin is also coming into some resistance here. It is showing signs of weakness. It's pushed through the golden pocket. It's at the 786. I'm not going to be surprised to see a rejection here. I have a short on BNB. And I've been playing near as well. So these updates I'm referring to was just in the members group, but I shorted this initial touch here, adding to my shorts, taking profits. And then when we got this big move up, liquidity grab, I shorted. I was kind of anticipating something like that. I shorted it really aggressively, and I just pointed out that we have a nice swing failure set up for a short as we come below this high and we back test it. And that's kind of what I'm looking for potentially on that. But so that's another short I'm in. So right now I have shorts on Ape, which that's an older short. I have profits on it, but I still have a lot of that short open. I have shorts on BNB from up here still. Profits taken, but still holding that short. I have a short now on VET, and I have a short on near. So one thing that's really dangerous about shorting tons of things at once, you really want to be careful about your entries, because if you suddenly, I mean, say you enter here, you have a short on near, you know, the highs are 3% away. It's really hard to manage your risk because the market moves together in all crypto. So you kind of want to pick the things you want to short. I just so happen to have some shorts from before that I've taken profits on, and yeah, I mean, I took a stop loss on Bitcoin last night. It was quite unfortunate. I got stopped out by like $1, and I had made the decision. I had my stop loss up here to bring my stop down as we approached the New York Open. And I figured if we push through this, you know, I was live at the time around 5:15, 5:30, about an hour before the New York Open. It's kind of likely that we take these highs too. That was just a complete wrong call. I got stopped out of that short just by like $1, and then price dropped, obviously. But we can see if Bitcoin rejects here. I'm just kind of expecting at least lower locally on Bitcoin into some levels down here. But many altcoins are at major resistance. BNB is at a major resistance idea. A member pointed out this really nice descending channel. Trend line pulled here, anchored here, touching the top perfectly. We have this horizontal line that we've touched exactly. We have this ascending trend line, which we've touched exactly. We have the 50% fib pulled from here, an 886 fib from here. We have a golden pocket fib from the impulse low high. So anyways, lots of resistance here. An interesting place to short, but obviously resistance can break. But for now, we're definitely seeing some signs of resistance. But to the star of the show for me, because this is just the new position I'm interested in, it's FAT. Yeah, I always just want to use risk management whenever you're trading, you know? The idea would be for me here on VET, well, I like this idea. I like these parallel channels. Excuse me. And am I willing to put on, you know, just because my stop is 2% away, even if I sometimes might run a stop 4% away, it doesn't mean I'm risking necessarily even 4% of my portfolio. I can just put on a small position with a bit of a stop. Am I willing to put on some risk here to short some resistance? Or same thing, are you willing to put on some risk to long some support if you get it right? And that's just a question you have to ask yourself. And if the answer is yes, you decide what am I willing to pay to see if this idea will work. And if you're comfortable with the answer to that question, then you can put on a position. You should always be comfortable with the idea of taking a loss. And it's predetermined, you know how much it's going to cost you to see if this trade will work. And that's how I decide whether or not I'll put on a position. So we're draw this as an actual horizontal line. We're losing this, well, we're testing this high. So this is where you might expect, you know, to either potentially bounce and get that impulse into the top of this channel and get a clean touch. Those clean touches are very nice. And then, you know, if you start losing this, I think that would be a trigger for me. Or we start breaking down. The problem with this is we haven't tapped the channel. It's surprising how often you get clean taps of it. So even if this happens, you still, I would run my stop wider because you could just rally up and still tap that channel. And it wouldn't really invalidate the idea. The question is, what really invalidates this idea? You know, even a wick up to here, if we come back below, doesn't really necessarily invalidate it, but if you come back below, you could always re-enter. The question is, you have to have invalidation somewhere, and where do you put it? Well, it's not completely crazy to just think you should put it up above this high. But for me, that would be quite a ways to travel out of this channel. If I'm trading this channel, I don't know if I really want to keep my position open if price moves 5% out of the channel. I'd rather just cut it, and if we re-enter the channel, then I can decide to reopen. But that's my thought process anyways. I don't think a lot of people will be looking at this channel, and the reason is, oops, especially if you delete it. But like the average trader, I don't think is looking at this. The reason this channel isn't so obvious is because, oops, the only way you get it is there's no actual clear trend line from the highs, which is usually how people pull channels. There's nothing here. And even if you pull from here, we've broken through. But if you take the angle, which is what I like to do, from the lows and you anchor it to the highs, then you get this beautiful idea. And it's kind of predicting a channel forming. So I call these predictive channels. I made a YouTube video on them recently. They're very powerful tools. And oftentimes they can find the highs on really impulsive moves very cleanly. And I don't think they don't appear obvious to most people. So yeah, I wouldn't be surprised still to see this impulse up into this channel here. In which case I will add, and I'll have to swivel over to my other computer to do that. Someone's saying they're just watching my 4-hour live stream from the other day that I recommended people watch. They're 2 hours in, but the 2 hours went fast. They thought they'd be bored, but just wanted to say thank you. I mean, I think it's a pretty interesting live stream. The time flew for me, actually. I try to cover stuff and keep it interesting. You know, it is hard to analyze the market, analyze 6 or 7 things live for 5 hours and stay, but I think I found a way to keep it interesting. So someone's asking, how much capital / leverage would you do on a trade? First, I want to say the amount of money that the size that I trade is irrelevant to you, right? It's irrelevant to the position. It's irrelevant to the analysis. So if I trade a $1 million position here or a $1 position, and I see people always comment like, "Oh, I bet your position's with $1." It is not. But trying to infer that anything about the size I trade should tell you how you should trade is ridiculous, because you're trying to trade based on a percentage of your account being at risk. So if you have $1,000 of an account and you want to keep your risk within 1 to 2%, and say your stop loss is 2% away, then you can open a $1,000 position and you maintain your 2% risk, right? If your stop loss gets hit, you lose 2%. Now, if I can open a $80,000 position and maintain 1 or 2% risk, that doesn't mean anything to you, right? That doesn't mean you should leverage into a 70, or a 100x position and turn $1,000 into a $70,000 position, because now your risk management is completely messed up. I mean, and you'll blow up your account even if you just happen to win 1 or 2 trades that way, and that could be exciting. It's like a drug, and it takes a couple trades with high leverage on your entire account to blow up your entire account, and it's just, there's mathematically no way that you'll ever be consistently profitable trading with high leverage. Should have technical ideas for your stop losses and not be risking more than 1 to 2% of your trading account on a single loss. And that means if your stop loss is 2% away, you could enter in with your entire account. That's a 2% loss. If your stop loss is 10% away, that's a wide stop loss, but for whatever reason, and you want a 1% risk, well, you can enter in with 10% of your account, because a 10% stop loss on 10% of your account is a 1% loss on your total account. So someone's saying, thanks for me being blunt to that question that they asked. It says, school starts Monday, got wrecked, man, but haha, recovering on this flash pump. So the problem with high leverage trading is, obviously, it can leverage is a tool that you don't use to trade more money than you have. People don't understand that leverage has a practical function, and it is not to increase your size and risk. But the problem with trading leverage is you're risking essentially putting yourself out of the game if you're trading with high risk, high leverage at any moment. And and then you're not trading anymore. You're not building the skill. You've lost all your money, and you have no chance of building your capital. The other problem is, even if you're using moderate leverage, let's call it, you're going to go through all these boom and bust cycles where you're getting wrecked, your account's drawing down, and then maybe you get some lucky trade and your equity curve goes way back up. But this boom and bust cycle is completely, it's a very emotionally taxing, and eventually, mathematically, I know this is hard to understand. I have some videos on it, but mathematically, you eventually will just zero out your account. Because of the laws of large numbers. So the probabilities that you eventually take 10 losing trades in a row are almost a certainty if you put on enough trades. Yeah, so David's saying he's been trading on 20x, lost half of his account yesterday, and somehow made it all back today. Yeah, I mean, that's the story that most people have until they eventually lose it all. And some people don't think they ever will lose it all. They think, well, I still have 50%. I could double it today. Yeah, but do that a couple times, and one day you'll look and your account will be completely zeroed out, and you won't believe it. So one thing I say, when I say leverage doesn't matter, what I mean is, you're not thinking about leverage. You're thinking about risk. How big is my position size? Where's my stop loss? And you position size according to that, trying to maintain 1 to 2% risk in a position. Your leverage is irrelevant. If you're 100x leverage, but you put on a position size with, say, cross margin or whatever it is that maintains 1 to 2% risk, then it's the same as being on 1x leverage as long as your risk is intact. But what I don't recommend, because I've talked about it enough on Twitter, I guarantee 99% of you have no understanding of how leverage works. Just by the comments I get, like I would say 1 out of every 200 people actually understand leverage. So my suggestion is don't use it at all. You don't need it. The legitimate uses for it are probably far beyond your need for use. So that'd be my recommendation. Someone's asking, does higher leverage increase the fees? No, your fees are based off your position size. I mean, if you put on a bigger position size, but if I put a $100,000 position on with 1x leverage, it's the same fee as if I put a $100,000 position size on with 10x leverage and $10,000 of margin. I have a members group. Someone's asking, do I have a Telegram group where I post? I do have a members educational group. And I do talk about my setups and do live updates and whatever. And the point is just to break down this style of trading I use. And I do a lot of educational content on it. That's the luckyapestradingfloor.com. You know, it's not for everyone. Some people aren't interested in that stuff. But, I mean, I think generally people there love it. But I work hard and sometimes stay up all night and do members live streams for 5 hours in the middle of the night. There's nothing here. I'm just kind of pulling this, but this wouldn't be really a relevant channel in any sense. I do want to, I'm just going to see if there's any examples of this on the 1 minute chart. Some of these alts have kind of strange looking. I'll just go to the 5 or 3 minute chart. On the 3 minute chart, there is, sometimes you will find very nice parallel channel ideas forming on low time frames at key high time frame levels. And they can be confluence, but just gotta see if price is moving through something like that. I don't think we do have anything here. No, I'd certainly say not. But for now, this isn't, I mean, all we have for weakness is we have this initial rejection. We are coming back below and back testing this high time frame 786, but we are above these highs. So we're kind of trapped in between some resistance and support with a channel above us, a little high that we could swing failure into that channel, but certainly rejecting from here wouldn't be crazy. Bitcoin still holding up this local 786 as resistance. Rejecting from its local golden pocket. This is all analysis from my members live stream today, because I was talking about, I was saying that shorting this swing failure, I was already short, but could make sense. And then you could take profits, you wait for these levels. If these levels break down, each of these horizontals, you could wait to do your first TP1 until there's a sign of strength. Like, for example, claiming this level, or if you break this level down, if you reclaim it, then you could just TP1, set your stop to entry. Maybe you could look to add on something like that. But, it's definitely fighting to hold on. BNB pushing up back to the highs of the range. I have a lot of fibs pulled here. A lot of these are high time frame fibs that are just overlapped here. I'm just interested to see where BNB is. By the way, this was an example I was doing in a video of how not to pull a channel. This wasn't one I pulled, because that is not relevant or whatever. So we're testing the 786. We've swing failured this little wick here. So sometimes, if we have a key fib aligning around a little pivot high like this, it's going to be a little liquidity grab. I'd like to start seeing some weakness here, hopefully, because I'm in shorts. And the idea would just be, for me, I don't trade very aggressively on the weekends, but maybe I end up in some nice shorts at high time frame resistance levels that carry on through the weekend. Someone's asking what this indicator of the VWAP is. It's the volume weighted average price. So this one resets every day. And it's sort of like a mix. It's sort of like a moving average mixed with a volume profile, where it's weighted to the volume. So if a move happens on low volume, this line's not going to move up very much. But if volume is following price, then it's going to, it can act as support and resistance. So, let's look at Bitcoin here. Go to the 15-minute chart. It's kind of more of a scalping tool, but what can happen is it tells you if price is getting really far away from the VWAP, then oftentimes it will come back down and retest it. So it can just kind of be like a little scalping tool in confluence with other ideas. If you lose the VWAP, then it can start acting as resistance. Then it resets at the new daily candle, and it's just kind of telling you how price is moving in relation to volume. That's the purpose of it. So it's just weighted with volume. Lots of comments. I'll just skim through them really quick. Can you please be less... Someone said, can you please be less technical? Some of the words you're using look more advanced for newbies. Yeah, I think that's a problem. I mean, that's why I teach a lot of the concepts that I use. Somebody commented the other day when they first joined the members group, they had no idea what I was talking about, anything. But then after a lot of time, they know exactly what I mean. They even before I explain what I'm talking about, if they see my chart, they know exactly what I'm looking at. And that's just the reality is, I use some advanced concepts in trading, and I use them because they're useful and effective, and I teach them because they're useful and effective. But I understand that they're not. It's going to be out of reach for a lot of people. But there's only so many ways that you can. I'm not saying this in an offensive way, but dumb down the content, because you have to. The point is to talk about what's happening, because this type of stuff repeats over and over and over again in the market. So you need to know what you're looking for, and yeah, learning the terms, learning the tools, learning the ideas, the concepts. That's just kind of some work that needs to be put in by an individual if they want to understand this stuff. Not everything can be so simple, right, and packaged neatly for you. Some things take a lot of work, and unfortunately trading is one of those things. It takes a lot of work. It's not just technical tools, it's psychological tools. And yeah, there's a lot to do, or a lot to learn. People talking about risk management in here, stop losses. How do you tell when a channel is relevant? I would watch my parallel channel video that I recently made on YouTube. It's really good. It's probably the most important video I've made in terms of technical tools. I've never seen parallel channels used this way. It's a way that I use them regularly. It's how I've shorted like all-time highs and long lows and whatever. And I guess it's a way I've adapted to using them. I think it's really powerful. I'm sure there are other people that use them that way. Like I just haven't seen it. So yeah, just try not to spam too much. I know you want your question answered. And the reason I say that is because it gets my hopes up that there's lots of people commenting, and I just realize it's the same person asking the same question. And then I feel sad. Someone's saying, do I use limit orders? Do I use limit orders or market orders? Typically market orders. There's actually in the members group I had a long conversation with a member who finds he gets better. His struggle is he has a plan, and if he tries to manually execute it with market orders, he ends up either going in too early, or not trading his initial plan, or taking it late, or maybe trading it too big, or putting a stop loss up. And sometimes if he just puts a limit order with a wider stop, it solves the problem of him having to struggle like executing the trade. Someone asked if I do analysis in the Discord. I read the question before I answered the other one. I'm not sure. Maybe it got deleted. I don't know. But yeah, I do analysis in the Discord. I mean, basically, this is what I do every day. And so I go through these concepts, I share my analysis, I go through just my perspective on the market using the tools that I have available to me. I'm not always right, but I just try to add context to what's happening in the market on a daily basis, and where I think key levels are, and if I think we're getting a reaction, and sometimes I'll have a level I want to trade, but I don't trade it because there's no reaction. So if I've talked about an idea or a level, I'll usually update if I'm taking the position and try my best to explain why. And the idea is just the more exposed people get to these concepts, the more likely it is that they can start implementing them into their analysis. Yeah, the downside is a market order is more expensive. You pay a bit more of a fee for a market order. On Bybit, it depends. They have fee discounts if you trade a certain amount of volume, but I think it's based at 0.075%. So the benefit of the market order, this was what I was explaining to the member so he had a trade setup, and his setup was this. I'll just go through it. His setup was to limit long when we sweep these lows, targeting back up into the highs. So kind of a swing failure idea. But what happened was when we moved below the level, then he entered here with a market, and then he put his stop way tighter than he was going to. Then he got stopped out, and then he didn't re-enter. And so what I just explained is, well, just a couple things. I mean, ultimately, you can sometimes misjudge a reaction, but then see a better reaction later. Which I might actually, I'm going to go over an example of that. But what I said is the benefit of a market order is, well, for one, I probably would use this low as the key low, which would be more obvious that we didn't claim it. But let's just say you didn't, and you were entered here, and then this happens. You get stopped out. You put your stop too tight. But then you see this happen. Well, you have the benefit of now this knowledge. Because if you just set a limit order here, you don't have the benefit of actually seeing that price is reclaiming. Or in his case, a limit order here was his idea. A limit order with room for a stop. At least here, you see this happen, and you can just mark it in. And you just have more confirmation. You get to make an active decision based on actual information you have. And so the cost of a market order, I think, can oftentimes be worthwhile. The downside is you have to control your kind of emotional state. If you have a plan and say, hey, my plan is playing out here. We grab the liquidity under the lows, we're reclaiming it, I'm going to enter long with a stop under here. And just execute that. It can be hard to do and either not take the trade or put your stop way too close, etc. You know, this, and even for me, like that's something I have to control. I have my initial small position. I'd like to add here, but I really am going to wait for some more weakness. Even though I think it's like, we could probably get a rejection. My stop is probably going to be safe. You know, should I really wait to add here? But the answer for me is yes, because I want to see this weakness come in. I think the details for someone's asking how much it costs. The details for the membership are on the website. The website is in my Twitter bio and in the description of this video. Okay, so an example of, where you're looking, I talk about swing failures a lot. There are a ton of tops and bottoms that come in and finalize that resistance as a swing failure. So I'm oftentimes looking for the swing failure entry, and sometimes, like I thought, well, we're coming into this major level on near, which when price was actually way down here, I was live, and somebody was saying, do I think this was a good short down here? And I was saying, I really don't. I actually did short this initially on near, but I just want to show this really quickly. So you had this really nice golden pocket. It's important resistance from that pivot high. It was really nice to trade on the first touch. You got, it ended in a swing failure, for example. You got this first initial rejection, really nice. This was like a 25% rejection. But what I pointed out here as we were pushing up again, if you should short it again, my preference would be no, because look how many times it's been tested. That level's getting super weak, and I just said it's really likely to break, and I would be looking up into this level, which is the more major golden pocket level. So when price pushes up to this level and I'm looking to trade it, well, I'm looking for that swing failure entry, which is we put in this high, price moves up below and comes back below it, and I got to clear off the chart a little bit here. And I don't know if this is going to be the high. I just know it's a swing failure. And so as price did come back through it, and we retested this level a couple times, I'm short from that swing failure, and I took profits on it, but I already know if price comes up through this level and we close and swing failure these highs, I'm going to take that short as well. That's a totally different setup, and I'm expecting there's a good chance that this level resolves in a liquidity move like that, and so I'm waiting for it. I don't know if this is it or if this is it, but ultimately there's no way that I'm not going to be looking to short reactions from this major level here on near. And so I'm just looking for that entry. Oh, but the price of the membership, there's a $27 tier and a 97. The difference is the 27 is just all the educational materials. The idea being that you can go through them, understand the concepts, ask questions in the Discord, and then the added, this is actually very nice. I got distracted. The added benefit of the other one is every day I'm going through and analyzing the chart using all the things that's taught in the educational content that you can learn being in the Discord. Of course, you get both with the higher price membership. So this, I didn't notice this till just now, but this low, we're forming a parallel channel here. And you can take the angle from the highs, use this as the anchor. This kind of explains some of the support we're seeing here. But we'll see. It'd be, a sign of weakness would be obviously to break this down. And something kind of cool, somebody was asking about Forex in the members group. I just want to point out that this style of analysis works on everything. It's not just crypto. This is, since 2008, the all-time high of the Euro/USD. And you have this really nice descending channel idea. It's actually not quite a perfect touch. Maybe it is. It's kind of right in here. But here you have price moving up from this pivot highs 618 in 2014. Get this nice rejection. You get another rally into the new 618, a nice rejection in 2018. And you're actually forming a parallel channel idea where we pinged off the bottom, which is angle here, anchored here. That is also coming into the 786 from this, the 2000s low. So, the point is pretty much everything as a price chart actually moves the same. And the reason I believe that is because I believe price action is based on human emotion and psychology. It's just a collective map of a bunch of people making typically emotional decisions. And that's why these patterns repeat. Obviously, there's algorithms and bots that are trading stuff too that create some patterns, but okay, someone's asking any thoughts on what do you like to do after a trade that goes wrong? Any tips to help get over it and move on? The biggest thing is you probably have to completely change your perspective on trading. Now, so my perspective is when my stop loss gets hit, my emotional state shouldn't be that anything bad happened. I determine that, right? So if this is my setup, I'm in control. And I get to say, I want to short this. I want out here. I'm willing to lose X amount of dollars if this idea doesn't work. And I want out of the trade here. That's my decision. And so if this gets hit, perfect. That's part of my plan. That's where I want to be invalidated. Now I'm going to wait and see what happens. Do we rally? Do we get a retracement? Is there more signs of weakness, a different setup? And typically if you're having a major emotional response, it's because you're losing a lot of money, but not always. So one way is to control your risk. You shouldn't be losing enough money that the money loss is putting you into an emotional negative state. But some people just feel it no matter what, even if they're losing $1. And the thing is, trading is not about being right or wrong. It's about probabilities and invalidation, right? So it's like, I have no idea if this trade will work. If it doesn't work, I wasn't wrong. I'm just trading an idea. How can I be wrong if I don't know what's going to happen? Right? This is how I would put it. Trading is like, if you're trading a good technical system, it's like flipping a weighted coin. And so if I give you a coin that lands on heads 70% of the time, and I say bet on heads or tails, and you win, you win the bet if it lands on heads, you lose it if it lands on tails, and you bet on heads, and it lands on heads. Ooh, you were right. You're so smart. if you keep betting on heads and suddenly it lands on tails, were you wrong to bet on heads because it landed on tails? It had a 30% chance to land on tails. But you would never feel wrong. You wouldn't be like, wow, I'm an idiot. I should have bet on tails. You would understand that's a game of probabilities and that you're always going to bet on heads. You're never going to feel dumb when it lands on tails because 70% of the time it's going to land on heads and you're going to make money. You accept that 30% of the time it's going to land on tails and you're going to lose money. And it's not about being right or wrong. So again, I'm trading a technical setup here is the idea, and it's not about being right or wrong. Because I don't know what's going to happen. I'm just betting on heads. And if it lands on tails, I'm not going to care. So yeah, I think that's the perspective shift that needs to happen. When you enter into a position, you've accepted the loss. Until you've taken profits and that stop comes to entry, that trade should be accepted as a loss. Even if it's working towards you, if you haven't taken any profits off of it. And so you shouldn't feel anything positive or negative until you've taken profits and put your stop to entry. If you have a winning trade, you can be happy about that. But until that happens, you just accept this trade is either a winner or a loser. I don't know. But I'm going to put myself in a position to find out by taking it. And yeah, I think people think that trading is about being right or wrong. And this is how I would put it. Am I wrong? I'm never going to be, well, not never wrong, but I'm not wrong that near is at resistance here. I've identified that. It's clear there's resistance here already. It's clear this is resistance. Now, is this resistance going to break or is it going to cause a rejection? That is not knowable. So I'm right, this is resistance. I'm deciding to trade it. Whether it breaks or we reject, how could anyone know? You can just form a lot of ideas. It's sort of like if I turn on if I turn on all my analysis on Bitcoin, I spend a lot of time putting together lots of crazy ideas, and I look for as much confluence as possible. My charts rarely look like this, obviously, but I'm looking at all the different technical tools I have in my belt. I'm trying to put all the levels together. I'm seeing where tons of ideas overlap. I'm trying to get as much confluence as I can, and hopefully I have a good idea and I trade the ideas I have, and if it doesn't work, then that's fine. Good analysis, I think, should consistently be right about where key resistance or support is, but ultimately you're just identifying those levels, you're waiting for them, and you're trading them, and that's all you can really do with risk management. Okay, someone is asking me to look at ETH. I'll do that here. I do want to I actually should set an alert here on VET. I do need to pay attention here because this is sort of a critical juncture in price. I'm going to turn on my speakers. I don't typically do that on a live stream because you guys don't want to hear my alerts, but I need to be able to hear it a little bit. And we can look at ETH. I'm not trading ETH here. But clearly, I was doing some analysis. Sometimes I'll find, like this happened to me on DOT. I did a live stream analysis, and someone had asked me, and I obviously drew out what I thought might be a good setup, and I didn't set an alert, and it's like, oh man, that would have been really nice. But ETH, I think it's sensical to maybe anticipate, if we don't take these highs, some kind of retracement here. This isn't a really fully formed Elliott wave idea. I don't really like a lot of this sub count stuff, but this could kind of make sense for a sub wave of a higher degree wave 3, come back down to this ascending channel, the 50% fib, and calling this like an expanded flat, or sorry, a potential running flat. That's a very hard corrective count to predict, but it's basically where your wave B comes up to the 123.7 extension, your wave C comes down and does not take wave A. And I would use this ascending channel idea to maybe confirm that that could probably be the case. But yeah, so we have, I mean, quite an aggressive move up here on ETH, retesting these highs. I doubt there, I mean, there might be an 886 fib here. And so if you have a, you know, something like an 886, you could start putting together some harmonic ideas locally here, where you're trying to, you know, there's a lot of harmonics that like to move into the 886. I don't really feel like trying to build a harmonic idea here, but you know, the fib retracements, whether it's like a 123.7 or deeper 786 or golden pockets, they give you some trend ideas, right? Like a deeper retracement leading to a shallower retracement. But that's really advanced theory, I would say, in terms of Elliott wave and whatever. I just want to see how many people are even here. About 100. But yeah, the 786 definitely seems to be wanting to flip to resistance. The level I'd really like to tap here on Bitcoin to the downside before a rally is this 382. This would push us out of this ascending channel and break down this trend line, which I prefer. I think this ascending channel was best before it formed, and I'd rather this trend line break. That will fake people out. We did bounce off the 382 from this pivot low perfectly the other day, but I was really expecting and hoping to get this one. Let me also draw an idea here where we have this, I'm going to delete some of this analysis too to make this all clearer. We do have this idea here that is still holding very nicely. Let me just make sure this is pulled more or less cleanly. So is this possible to keep an eye on? Like it could come in around the 382. We won't intersect with it. I was hoping to get this intersection, but we would have needed to keep dumping quite quickly. But locally, this descending channel is interesting. We're still holding it as resistance, and I'd like to come down into these levels. And if we get a nice reaction, I'd like to trade them, I think, up into sweeping the highs and then looking for a rejection back to the lows of the range around 18K. That's my primary thesis. We'll see how the levels play out. The hard part about trading something like this is your stop is kind of weird because there's no structure here. So you might be better off to wait for like a local bounce, a retracement, and just trade a local retracement with a stop under the new low and just cross your fingers and hope that that level holds, I guess. Otherwise, you do have to run quite a wide stop, and for me, I don't know if the risk reward of a setup like that is great, because one, it's not bad, but you're requiring like a breakout, a sweep of the highs. If I could get this something closer to this, that'd be great, but I'd need to look for local price action to make that make sense. So we are, flirting with this high here. Like I said, I have my initial short and I want to add, but I'd like to come back and retest that level, and just waiting until we break these highs down and we can retest them, or until we swing failure this high. Those are the two triggers I'm waiting for. If we just break through this high and we don't come back below it, well, my initial short is just I'm gonna stop it out. I'm not gonna add until we can come back and show some weakness. And it's not that once this happens, it means that price can't stop me out. It's just typically this will be a better confirmation for an entry. I'm just going to glance at my phone for a second. The only thing is I don't like trading on the weekend, so would I love this scalp long? I don't know. I just don't know. There's some horizontal line ideas here. Like we could come back and kind of back test, resistance, resistance. We could back test these levels as support here. Someone said, how many everyday hours do I spend in this? 18? 18 or 20? I'm usually doing something analysis or trading related every waking moment of my life. No, pretty much. Yeah, someone's saying this near setup was really good, this swing failure. It really was. These, you don't always get them, but these really aggressive, like fast liquidity grab moves where price shoots up, probably stops out tons of shorts, traps a ton of breakout longers, and then reverses really quickly, can offer just really nice setups at key levels. Yeah, VET's still bouncing. There is some local support here on near, but the thing is, like, people, this is one thing I always like to remind myself, but remind other people too, is when you have this rejection from a key level, I might be looking at this as, wow, a huge rejection, important resistance, whatever it is. Probably the majority of people are looking at this as, like, this is a great long. So why is price going up and down here? Because people are longing, and these ranges build liquidity. As people put on their positions and they put their long stops under here, and longs keep building, more people want to long, more people are looking at this as, wow, this is so bullish, probably, my target's way up here for near. I'm going to long this. My invalidation, we could even have invalidation that's close right here. Some people probably have it down here. And yeah, people are longing. Some people are shorting, probably getting stopped out. And this liquidity builds. And then, you know, a lot of people who have tuned into this fast move on near and want to get it in on it and are afraid they're going to miss near going back up to all-time highs. Because a lot of people are looking at this right now. Just the emotional perspective here would be, oh, wow, we're about to go all the way back up to $20 probably. That's 300% away. I'm not saying we can't. I'm just saying if you want to trade longs on near, you trade them at support is my take. So you look for these types of setups where you can get in on key retracements. Can get in, maybe this swing failure would have been hecka nice, where you have this low and you wick below it, reclaim it, you enter here, stop below the low. That's essentially this short. If we want to quickly clear everything off here, this is a swing failure locally of the high, where you have the high, you wick above it, you enter, and you put your stop above the high. Same thing here, although this is a higher time frame idea. You swing failure this low, you see all this heavy volume come in. Why does this volume come in? Because people are longing here. They're putting their stops in under this low. The price comes back down and stops everybody out. All this volume comes in. Market makers fill their long positions. And your trigger is you reclaim the low and you have a really low risk long. And then price gets this nice move off of that liquidity grab. Because all the people who were long here, wanting to long and got stopped out, now a lot of them are stopped out and have to pile back into the market all at once, and that can create a really strong reaction. And all the breakdown shorters are now getting wrecked and squeezed out. Someone's saying, who profits from liquidity grabs? Well, liquidity grabs, technically there's exchanges that could profit from stop losses, but the main purpose that they happen in the market is if I want a huge near position and I'm a market maker, my best place to fill that position is at the lows and to generate liquidity under the lows, because you can't just open a position of, you know, $200 million on near. You need to build it over time, and you need this liquidity to fill up your positions. And so you have limit orders set here, and you actually drive price into that limit order. And yeah, and so it's market makers who benefit from getting big volume fills, and then they can help push price up and unload at the top. Same thing here, right? Who benefits? If this is a rejection and we see all this heavy volume coming up here, well, who benefits from a rejection here running up into these highs? Well, anyone who is building a position down here, they now need the liquidity to start unloading it. And the reality is the majority of the average people, traders, no one wants to long this. This is scary. Everybody wants to long this. No, everyone wants to short this. And so that's why people get on the wrong side of the move. So these kind of moves generate a lot of liquidity to unload these positions. You need somebody on the other side of your trade if you're a market maker. You can't just sell your position to no one. So the idea would be these big moves produce liquidity for now shorts to be filled, longs to be unloaded, and you do it again. This could just be like near could be bullish here. We don't have to retrace all the way to the lows. We could get a minor retracement and just sweep some of these local lows. I think there is a golden pocket. Even this 786 would be really interesting. It's a little far, but sweeping this low could be a really nice liquidity grab as well, even for a scalp long. Come back, retest the highs even. Okay. So someone's saying ENS looks like a good parallel channel short. What are your thoughts? You know, I probably am not going to... I do want to just kind of somewhat pay attention to things I'm looking at. I'm sure there is a nice parallel channel on ENS. Most things form in parallel channels. ENS is interesting. It is. So how would I want to pull this? Certainly this would be interesting. Then typically I'd want to look for some fib confluence. You know, I would really be waiting for higher on ENS. There's not a lot of structure here. Even this 786 would be really interesting as like a high time frame swing failure idea, where prices moved up, taken these highs, obviously lost them, and we come back and retest this 786 and this level. Would be quite interesting. And obviously we'd get probably some kind of rejection regardless here, but most likely. And that would be an interesting short. I think you'd need to wait and see what kind of potential like trend parallel channel ideas you could have there. I have an alert going off. So we'll keep an eye on VET here. I'm going to move it down a little bit because we're still just testing the same level. Still not a trigger for me. But, you know, the next thing I do on ENS is potentially look for some downwards trend lines, but even I don't think this is likely to have anything relevant. Yeah, this parallel channel is interesting. So, I mean, even if it played out like this, right? That could be a nice interaction. Someone's asking what I think about a lot of things. You know, sometimes I don't like doing a bunch of new analysis because I've been doing it all day, and when I'm getting ready to trade a level, you know, I'm not really looking to do a ton of analysis. Where is Gala? I think for some reason it's not alphabetized. So I'm short on Gala this was from, you know, 5 or 6 days ago. I shorted this ascending trend line idea. And actually depending on the exchange, this was a cleaner touch. So, yeah, we haven't really got a major retracement off of Gala from this. I think we're just at the 382. Or no, we did wick. Did push through the 382. We're at the 0.5 fib. But yeah, I mean, I'm expecting lower. Essentially, the way that this Gala price action has played out, from my perspective, is I think this was a relevant wick. because it was our impulse low. We came up, tested the golden pocket, we're bouncing, but I'm expecting lower on Gala. Yeah, if I had repulled this channel from the highs, it's also the middle of the channel. So when you're shorting an ascending channel like this, your main targets are the middle of the channel, and you want to look towards the lows of the channel. So this would be a nice potential target on Gala, right around the point of control at like 0.5286 cents. I'm not really trying to, like, when I do that, it doesn't mean I'm going to open a short here necessarily. It's just, if I get this level, I'd be interested in trading it. So that's why I'd set an alert there. That's one thing about analysis. You should have upside levels, downside levels, set alerts. And the idea is, if you get the level, you're interested in trading it. You're not trying to guess if price is going to go up to a level or down to a level. You're maybe looking for a retracement. If you get it, you're interested in trading it. If you don't have a setup and you don't trade it. But yeah, really considering just putting an add-on vet here. I'm just gonna look at one thing really quick. So I have my order set up, and I just would hit market in if I want to mark it in. And do this. Just looking at something in the Discord really quick. If anyone's interested, still waiting, but if any, wait, I don't even actually think I can do that. I think, can I edit? Just looking at one thing in the, because if anyone's interested, I would recommend Bybit as a great exchange to trade on. They have a ton of awesome features, and I don't mind shilling Bybit because I think it's amazing. There's just so many things that it has that other exchanges don't, that allow you to put like partial stop losses. It allows you to trade long and short on the same pairs, which for me is really important because I trade my long ideas and my short ideas separately. So if I have longs from the lows and shorts from the highs, I might take profits on my longs and profits on my shorts, but I'm trading those ideas separately. And just because I'm maybe taking even a scalp short doesn't mean that I'm going to close all my longs. I want to keep those longs running as a separate idea. So those things like that are important. Someone's saying show the partial stop losses. They haven't figured that out. When you're in your trading window, if you just go to settings, there's a setting called take partial. Wait, let me just make sure what it's called. There's only two options there. It's TP / stop loss preference, and you do it on select position instead of on entire position. And what that means is if you open like a $100 short, let's say here, you can open it with a stop loss here. Then you could open a $200 short here, and you could set a separate stop loss. So both entries have their own stop losses, and you can go in and adjust the size of those stop losses. So the great thing about that is, let's just say like on near here. For one, you can just trade, like you could have a short here with a stop loss, then you could add here and have a separate stop loss on the add, whatever, that's an example. But another great thing about it is, let's just say I want to split my stop loss into a few pieces. and I want to say, you know what, if price comes up here, I want to stop out 30% of my position in profit. So I can have a stop loss up here. I can drag down 30% of my stop loss here, and that can act as like a trailing take profit for a partial take profit if this happens, and then, you know, whatever. It's just a way to take profit on strength instead of if as we're breaking down. Yeah, US does need. I actually do have a video. If you search in my YouTube Bybit, I have a video explaining that concept on Bybit. But yeah, you do need some regions do need a VPN. Bybit doesn't require KYC. It just needs an email. And so you can set up an account, fund it, and be trading within 5-10 minutes. And all you need is an email. Someone says I sound pretty young. How long? I'm 11. I've been trading for 6 months. No, I'm in my mid-30s. I mean, I technically put on my first trade when I was 8, just because my dad let me use his Scott trade account. But I wouldn't say I've been trading since I was 8. But yeah. This is interesting. Let's see if we can. My ideal entry would be a wick up through these highs into this channel, and that would be my trigger. Someone said Bybit versus Binance. I mean, for me, 100% Bybit. I'll never use Binance again, personally. That's my personal opinion. So this is kind of important to watch here for an ad, because it is possible that we just swing failure at these highs and then this creates a rejection, but my preference would be to take these highs. And so even though I'm in a short, I'd rather price come up and take the liquidity above these highs, because that makes a bigger rejection more likely. If I get stopped out, I get stopped out of my smaller position. But I do need to just need to set up my position, make sure I have everything how I want it, where I want it. And so what I do is I have this rough stop of where I think my stop will need to be on a liquidity grab. Obviously, if we have a deep one, I'll have to adjust it, and I'll just be marketing in. Someone saying, what VPN would you recommend? Well, I know there's lots of like NordVPNs. There's lots of paid VPNs I'm sure are great. The Opera browser has a built-in VPN you can turn on that's free. Somebody told me, I've mentioned this before, I don't trade on KuCoin, but somebody said on KuCoin you can't put your stop loss up to break even, which seems crazy to me. But yeah, I am paying attention here because, you know, my entries are important for me. Even a little bit of I like to have accurate entries. So I like to execute them cleanly. Because even if you're, like let's just say that on near, you were going to trade this swing failure retest. I'll show this really quickly. So let's just say we didn't come and retest the highs, but let's just say this is a 1 minute candle and you want to enter on that. As soon as you see a bit of a reaction, you enter. And let's just say you don't do that very quickly and price comes down another 0.2, 0.3%, and the idea doesn't work. And then you get stopped out. Well, even adding 0.2 or 0.3% can add up a lot over time if you're trading big size. And so having that mistimed entry by that little fraction of a percent can be, with size, it can add up. I mean, for me, it could be a few trades of mistiming trades that get stopped out for 0.3%. That can cost me thousands and thousands of dollars. Someone asked me to explain why leverage trading is not gambling, or did I just say people don't understand it? Leverage is. I actually did talk about that at the start of the live stream. People assume that you're trading leverage with your entire account, or the reason that you would use leverage is to do that. It's not. That, like, one of the main reasons you'd use leverage is to reduce exchange risk. So let's just say you had $500,000 that you wanted to trade with, but you don't want to put $500,000 on an unregulated crypto exchange. So you might have $500,000 to trade with, but you want to put your 50 grand or 60 grand or 70 grand on that exchange account, or some smaller amount, and you use leverage to represent the funds you have available to reduce your exchange risk. And you can add more money to that account. You can take money out as you want, and just that's one of the main reasons you use leverage, especially in crypto. It's just not to have all your money sitting on an exchange. Yeah, so leverage can be used as a tool to represent your trading account. So we're having this little local swing failure on VET. But I'm not sold on it really, frankly. Still like to come in under these lows. I still think it's more likely yet that we push up into these highs than it is that we reject here. But if we do, that's fine. I think we're still generating some liquidity here. There's probably a nice local fib right here. It's the golden pocket. I mean, for a scalp entry, this wouldn't be bad. Because, I mean, you could actually... What am I doing? Where is the tool I'm looking for? I mean, even if you took a profit at 1% move into the lows here. Yeah, I might take this entry, and I might just scalp it if we get a reaction off the lows. Damn, it's never a good sign when you can see your price move with your entry. Maybe you're trading it a little too big. Well, yeah. But I still think the most likely scenario is that we sweep these highs. And ultimately end with something similar to how this near move resolved. Well, it hasn't resolved yet, but we definitely got a swing failure. When you think about how price works and like liquidity grabs and things like that, all it takes is for a big trader to come in here with some capital and either pump price up and then fill their shorts, or come and pump price down, sweep these lows, and they can push price and then reverse the trade. And so ultimately, in times like this, you're kind of at the whims of market makers who you don't know what their plan is. But once you see the move happen, it can kind of make their plan a little more obvious. I hope this was an enjoyable live stream for everyone. I probably won't stay on too long. Either that when this move resolves, or I'll have to just play off my alerts because I do have some things to do, and obviously it doesn't make sense to leave the live stream running if I'm doing some things at the house here. Someone asking what the most important tips to becoming a professional trader. Time in the market, and to increase the longevity of that, those early years, and to give you the best chance of succeeding. I'd say very strict risk management. You probably shouldn't even be trading with real money for the first 4 or 5 months, or with any meaningful money. And you're just trying to build the skills you need to to trade profitably. And there's a lot of skills. And then obviously you want to learn from the best. And I'm not saying I'm the best, but obviously I teach what I know. There's a lot of great trading coaches. There's a guy named Mark Douglas. He has some great books. He's probably some of the best trading psychology content there is. And he's an old school, like he's not even alive anymore, but his stuff is amazing. Figure out the trading style that you want to employ and use, what works for you. That's another thing. Everybody has their own styles. You have to adapt. You have to find what your style is, what suits you best. But just prepare for the fact that it's going to be a very long road. And it's going to be really challenging and difficult, and might be one of the hardest things you've ever done. You know, I personally, I don't live in the States. I imagine if you want your VPN turned onto a specific country, that you know, I don't know what all the rules are or how it all works, but I'm sure there's some countries that you could turn a VPN onto and you're just gonna have the same problem. BNB swept the highs. So this would be like a little liquidity grab. Just locally, people are going to have their stops above this high. Price moves up, grabs the liquidity. And this can keep happening. We can just keep ranging here. You know, you always have to just be looking for this. But these are great potential scalp entries. Or sweeping this high, rather. Oh, I was kind of hoping, I mean, I was hoping we would get a move very similar to near, where we had the quick, fast liquidity grab on high volume. And then, you know, that price action would kind of resolve with some clarity. I mean, we do have some resistance here. Not quite a swing failure yet, though. Yeah, well, maybe all things considered, I might wrap this up. I'll probably do an update in the, there's the public Telegram. There's a members Telegram and all that stuff, but I'll do an update on this position in the public one because it's a obviously setup I've been talking about on Twitter, and hopefully, having my thoughts here has been just helpful for how you could think about an idea like this at resistance. But if this happens, I'm not going to short, right? If price just breaks out and we don't get the rejection back here, I need that sign of weakness, or you just end up shorting a breakout, which doesn't usually end well. All right. Well, thanks for tuning in, everyone. Yeah, the half-hour live stream ended up being an hour and a half. So have a good night. Enjoy your weekend. And, I'll be around.